This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the JDfn Forex Report.
Good afternoon, this is David Petrunik with the Forex Report. Today proved our efforts well as the euro-dollar fell as anticipated. We have been bearish the pair since last week, as the pair has been giving us confirmation signals that its uptrend was beginning to wane. Calling reversals can be tricky at times, since turning a market 180 degrees does not usually occur swiftly, as turning a market can often be like turning an aircraft carrier. So we have to be patient as the market turns and be cognizant that we could invariably be too early on our forecast. So we look for clues that may keep the uptrend continuing or failing to turn. Fortunately, we were correct and caught what looks to be the beginning of a reversal. Since holding our position over the weekend can incur higher than average risk, we are resting in cash until Sunday evening or Monday morning. With yesterday's poor retail sales figures, today's weak consumer confidence results worked as a great catalyst to kickstart the dollar buying or the euro-dollar shorting. It was also worth noting that the confidence report confirmed that consumers felt poor about their personal economic standing, but that the consumers felt optimistic about the overall economic standing. Since our economy is a consumer-driven economy, the consumer is a driver and the economy is a passenger. If the overall economy is to do well, consumers should primarily feel confident about their own economic standing. As we followed the euro during the Asian session, we saw prices test the lows of its range. As we opened in Europe, prices skirted just above the range lows, yet as the S&P 500 futures opened up this morning at 3:30 a.m. Eastern Standard Time, prices bounced off their range lows and gave us a weak challenge to the range highs. As we were entering the U.S. Open, prices started their day-long descent lower with little resistance at the range lows. Prices moved down in clean Elliott waves, and the short-term wave count is hinting a short-term bounce into wave 4 that may bind prices into a consolidation pattern until the S&P 500 futures open up again Monday morning, when we then look for signs of a wave 4 to continue the down move. Thanks for tuning in and have a great weekend.